It seems like someone's freedom of speech will be going out the window.
Well, meanwhile, as the US struggles with social unrest and the world's worst COVID-19 situation, its once booming oil shale industry is also in trouble. Two big names in the field have already filed for bankruptcy over the past 2 months, with over a dozen more reportedly preparing to do so in the near future. As you can see, the share prices of multiple US oil drillers quoted on the New York Stock Exchange have been on a steep downward trajectory of late. A pre-existing lack of confidence on the part of investors has now been compounded by a major slump in oil consumption caused by the pandemic. And it's not only the US oil industry that's bearing the brunt, as many other sectors are also under pressure due to the lockdown measures. This has led to a dramatic spike in the number of jobless Americans over the past 2 months, with the number of those filing for unemployment benefits reaching levels unheard of since the Great Depression. Let's now bring in Max Keiser, a former stockbroker and co-founder of the Hollywood Stock Exchange, who now hosts his own show on our channel. Max, good to see you. Now, the US shale industry seems to be among the sectors hit particularly hard by the current crisis, with numerous companies in the field now filing for bankruptcy. How big a blow do you expect this to be for the US economy in general, and is there really no end in sight?
Well, for the shale industry, it's an existential threat. For the reasons that we've talked about before, the industry is too highly leveraged. And in fact, the shale industry was never, ever going to see a profit. The amount of cash that goes in was always going to be more than the amount of cash you could get out. It's been cash flow negative from the beginning. It's basically an industry supported by the junk bond market, and the junk bond market is supported by the Federal Reserve and money printing. So now that the Ponzi scheme that is the shale industry and the Federal Reserve has blown up, a la Bernie Madoff, this whole industry is getting wiped out. Add to that the incredible demand shock from COVID-19, and this is impacting the whole global energy markets, but the U.S. has the weakest balance sheet and is in the weakest position to defend themselves against the ravages of both COVID and the pop in the global energy and bond Ponzi schemes.
And now estimates from various sources put the number of Americans employed directly or indirectly in the shale industry at over 10 million. Are all these people going to end up on the dole too?
Right. Unemployment in America is zooming higher, and it's not just the shale industry, but it's across the board. Almost every industry is getting impacted by the revelation by the market suddenly that America's got too much debt. You know, the American economy for the past 20, 25 years has been pumped up with artificially cheap rates, money printing, and faulty or fake accounting. Even a big bank like Bank of America recently put out a report citing the Federal Reserve Bank in Washington, D.C. as engaging in market fakery. They're accusing the Fed of faking markets, faking prices. The Fed is buying junk bonds. They actually bought a security that has the ticker symbol JNK, that stands for junk bond. And they're buying these by the billions, hundreds of billions, and trillions of dollars. So the way I kind of describe this, Nikki, is that this is part 2 of the 2008 financial crisis. So in 2008, the global financial crisis hit, and instead of reforming the system so that we wouldn't have a repeat, all the American policymakers did was give central banks and Wall Street banks a bigger line of credit to do the exact same thing, but much bigger. And of course, the results, quite predictably, are a much worse crisis.
So could the current crisis undermine the dollar's position in the long run, as many central banks around the globe may become disillusioned with the performance of the US economy?
The history of global reserve currencies goes back hundreds of years, and we've seen Portugal, Spain, France, Great Britain, and then the U.S. have the global central reserve currency that runs the world economy, and it lasts for about 100 years or so, and then it collapses, and then something else takes over. I think we're at the end of the U.S. dollar as world reserve currency. What comes after that, that's open to debate. You know, we can talk about that another time. But in terms of what's happening right now, confidence in the U.S. dollar is ebbing. the use of U.S. dollar around the world in global commerce is shrinking. It was after World War II, roughly 75 to 80% of all trade was done in U.S. dollars. That number is now barely above 50%. Once it drops below 50%, then you can officially say the world is moving on from the U.S. dollar. And that would have serious impacts in America because it means everything that Americans are buying today cheaply due to having a U.S. dollar as world reserve currency suddenly gets a lot more expensive. So the second part of this unemployment crisis will be inflation. Prices are going to start to move higher at a time when incomes are dropping. That's a recipe for disaster. And we see the riots all over America. This is a prelude for a much more serious situation, in my view, Nikki.
Do you think the shale industry even has a future? Will it ever recover?
The shale industry in America was never profitable from day one. It was totally on life support from day one from the central banks and the Wall Street banks. It was merely an excuse to print up junk bonds. There's nothing economic about American shale industry. Even at $60, $70, $80 a barrel, the shale industry in America in aggregate was not making money. It was always been simply a way for bankers to make fees by selling junk bonds to stupid pension funds. And the pension funds in America always end up bearing the brunt of these Ponzi schemes on Wall Street. So no, I don't think it's coming back because there was no reason for it to exist in the first place.
The Trump administration, to its credit, moved to raise unemployment benefits, but the aid package won't be extended past July 31st. Now, is it realistically possible to ensure within the coming 2 months that most of those who've lost their jobs will find new ones?
No, but here's the remarkable thing, Nikki, is that when these benefits that have been pumped into America's working class hit the bank accounts, it suddenly was determined, and this is borne out by the statistics, that American incomes have gone up dramatically recently based on this injection of funds from the government. That shows conclusively that before these subsidy checks that were sent out to Americans being unemployed, that Americans, by and large, are living on subsistence wages. America is a nation of subsistent wages. And, you know, the subsistent wages are just one step above slave wages. I joke that all this money printing requires a lot more dollars, and dollars are made of cotton. So America, to feed the money printers, may return to an agricultural cotton-producing country. Get down there, pick some cotton, so that the central bank can print money printer go brrr.
Well, the fear is that when the aid package is phased out, there will be a wave of evictions and a sharp decline in consumer demand. Is that a scenario that you envisage as well?
Right. So let's walk through that for a second. So people are getting furloughed, they're getting breaks on rent, et cetera, and they're trying to make it through the next month or two. But behind all the tenants are all the landlords, and the landlords are also highly indebted, and they're defaulting on their loans. And that means that banks that have made those loans to those landlords, their balance sheet is now crumbling. So we're going to see some major bank failures. And then we're going to see a cascade effect, and we're going to see a lot of financial misery. As I said, I think the best way to look at this, Nikki, is that it's part two of the 2008 financial crisis. Remember, the world came within an hour of going completely bankrupt. And then suddenly the money printers came in, and we simply kicked the can down the road for 12 years. Now in 2020, this is now the final comeuppance of this faulty system of trying to print your way to prosperity. And now we're going to see an enormous economic devastation. And of course, within the devastation, there will be some opportunities, but that's something we can talk about another time.
Max, thank you for talking to us. That's Max Keiser.
Sure.
Now, Beijing is threatening retaliatory measures against the US if Washington doesn't stop interfering in Chinese internal affairs. It comes as China moves to impose a new security law on Hong